You have a green bar? Yep. Yep, says it's live. Ozzie, you want to check your Facebook? Yep, says Ozzie Corn is live now on my Facebook.
All right. Do you want to put video on now or not yet?
Yep, says it's live. Ozzie, you want to check your Facebook?
Because
Sorry, forgot to mute us.
So last time,
All right.
hello.
Mary, welcome to the podcast.
Hi,
Can you
how
hear
are
us,
you
Mary?
doing? I can hear you. Can you hear me okay?
No, we cannot. One
Okay.
second. One second, Mary.
All right.
There we go. Can you hear us now?
I can hear you, no problem. Can you hear me?
Yeah, perfect,
you.
perfect. All right, so we can hear you. Welcome, Mary. Thank you for joining us today.
Absolutely. Thank you for having me.
And Mary, can you see everything? Can you see us?
I can.
All right, awesome. So, well, Ozzie, would you like to introduce Mary? And we got a little topic up of what we're doing today for anybody who's watching, but go ahead, Ozzie.
Yeah, so we're live.
Yep.
Okay, all right, cool. So I didn't know we're actually live just yet, but all right, cool. So yeah, Mary, actually, she's my tax person. So I wanted to make sure that we brought her on and talk a little bit about taxes. We work with a lot of self-employed borrowers, and a lot of the times things that happen is, they're making money, and
Yeah.
sometimes they write off either too much or they're just not really knowing what to do and end up biting themselves in the butt,
Yeah.
in other words, and not being able to purchase. So I wanted to bring her on and kind of, see what are some things that she sees, in the tax industry, that might be able to help potential buyers in our industry.
Yeah.
Thank you, Ozzie. Yeah, I have a couple comments on that. Are you talk to me a little bit about who your clients are? Are they real estate agents? Are they somebody getting a mortgage loan?
I'm sorry, hold on. We're trying to get you back on the audio here.
Oh, okay.
There we go. Okay.
We're back.
Yep.
Yes, you're back. I'm sorry. Can you repeat what you're saying?
All right. So talk to me a little bit about who your audience is. Who are your clients? Are you talking about, are these real estate agents? Are these people getting mortgage loans?
No. So actually, that's what I do. I'm a real estate agent. So we're basically focusing on small business owners that maybe are self-employed, have a construction business, or they might have landscaping business, or any type of business that that you see out there that maybe doesn't really know how to strategize their taxes and kind of doesn't necessarily do it right the first time.
And Mary, I'll add to that. There's a lot of people who have started new businesses in this last year. Maybe they had a hobby that they turned into an actual, something that's making them money and made them some residual income while they were out of work. And then, maybe it's starting to make more money. So this might be their first year filing taxes. So that's who I'm thinking of. I think the same with Ozzie too, or it could be people who have been in business for a long time and they've always been doing their taxes a certain way. Mm-hmm. But now they want to buy a home and they realize, oh man, I've been writing everything off and I have no profit at the end of the day that can be used for financing.
Right. So I guess the question would be like, what would be some of the biggest mistakes, or one of the biggest mistakes that you see small or self-employed business owners do?
So one of the biggest mistakes I see is that they don't actually form as an LLC. One of the most important things is to get that that little bit of separation between you personally and your company and what your company does. So forming the business is probably the number one thing I see. The second thing I usually see that can be a problem are your books. Nobody really wants to do their books. Nobody really enjoys doing their books, but in a small business that's profitable, it can be a really good opportunity to use up all the deductions that you could possibly have. So oftentimes we miss things, or we add things, or we round a number up, or maybe we find it on the ceiling. I have a lot of clients that find their deductions on the ceiling in my office. It's real important that you're being accurate, and in order to be accurate, one of the best things you can do is keep a bank account just for your business. Don't have your deposits, your expenses come out of your personal business account. Make sure that you are always keeping it in the account, keeping it separated from your personal. And the other thing is, you don't want to be transferring all the time between those two accounts. You want to make sure that you're disciplined in how you remove your money from your business account to your personal account. One of the biggest things you don't want to do is transfer. And this is back to this is one of those things that it's a good time for a check, because transferring If there's a regular transfer in and out of your business account that's not business related, they're going to go look at that account too. So, that separation is the most important thing. You'll hear an attorney, you'll hear myself if I'm representing you, called commingling of funds. You want to keep that as separate as you possibly can, and
Right.
that'll serve you the best.
Absolutely.
As the business progresses, as the business matures, maybe makes more profit, then you should be talking to your accountant, your tax person about moving to an S corp. There's lots of good benefits in an S corp that help small business owners. And as you're talking about for the trying to get a loan, we all know as small business owners, if you don't have a W-2, it's very difficult to get, it can be difficult to get those loans through. But if you're an S corp and you run payroll for yourself and you're creating a W-2, it usually makes things a lot less complicated.
Right, and honestly, that's one of the first things that when I moved over to Mary, that's one of the things that you brought up to me is that to create a business account right away, because I didn't have one. So that was one of the things that I had to do.
So you were sharing your personal budget.
Basically,
and everything?
I just did putting all the paychecks into the same account, and basically doing what she said, kind of commingling the funds without even really knowing.
Yeah.
Right.
So
many of us, we start out, we don't start out like gangbusters in our business. We sort of grow into it. So we're not thinking at the time when we start that we really should have a bank account. But it also allows for that good bookkeeping. So even if you don't do a lot of business in the first year, first couple years, you can take those bank statements to your tax person, to your accountant. They can help make sure that you get the maximum out of your income and expenses from those accounts when you have it nice and clear like that.
Nice.
Absolutely. By the way, what do you want to share with where you're located, so anybody that might want to reach out to you and have questions in regards to business tax information, how can they reach you?
Absolutely. It's MLR Professional Tax and Accounting Services. We're located in Goodyear, 2440 North Litchfield Road in Goodyear. Cross streets are Thomas and Litchfield Road. Our phone number here at the office, 623-505-7141. You can contact us anytime. We're very responsive here. We try really hard to make sure that we're communicating well with our clients. Our business clients, we try to at least meet with 3 to 4 times a year because we want them to have no surprises at the end of the year. We want to make sure that they're getting their taxes paid in, whether that's through payroll, through estimated payments, whatever and it's not just businesses, personal too, that's important. And then you never want to miss that late fall, October, November appointment with your accountant, because that's when you can make changes before the end of the year to help you with your tax liability.
Oh, wow. That's good information. I actually didn't realize that.
Yeah, so as an LLC and as a sole member, LLC or just a regular business, you are your money, and your money is you. Your business is you, and you are your business. But if you separate into an S corp, you've got real good separation there. You've got real good deductible, because now your payroll, if you run payroll, the payroll is deductible to the business. Plus, you're paying into your Social Security and Medicare. Maybe at the end of the year, we're paying into an IRA. All those things are you keeping your money instead of paying it to the IRS. If you don't do it that way, then you're paying tax on it.
You'll end up
really
paying
where
more
the
money.
real help comes. Yeah.
Yeah, and I know that's one of the things that we're working on as well within, while I'm working with her, it's something that we're trying to incorporate in the business as well. So now, Mary, at what point would you say it's a good time for maybe a 1099 employee to convert into an LLC/S corp to start doing these savings? Would you say 6 figures? Would you say under that? Typically, what are you looking as far as?
A lot of it has to do with your personal situation. Everybody's personal tax situation is a little bit different. But generally, you should be, anytime you start making $50,000 and above, you should start having a really good relationship with your accountant and your tax person. You want to make sure that you're communicating and talking to them. And almost always by the time you hit, and this is gross sales, by the time you hit that $100,000 mark, you should then definitely be talking closely, because it probably is going to be your opportunity to change to an S corp. kind of the beauty of the S corp is we can't ask for it to be retroactive in the current year that you're in. So we can get a little ways through the year before we decide that it's really time to change. It gives us a little flexibility that first year, because once you run payroll, you really want to continue to run it monthly to show that consistency and that you're really treating it like a business.
Right. I'd like to ask a question, Mary, and Ozzie,
Sure.
you brought this up. So a lot of what we see in business owners who are just starting out is they write off all of their expenses, and like I mentioned earlier, they don't have any income at the end of the year. However, Ozzie, you said that there's a lot of credits out there for business owners that can maybe offset that. Mary, can you tell us a little bit about that so people don't go that traditional route of just writing everything off, but maybe there's another way to help offset the costs?
Ozzy, can you help me with that? What credits are you? What are you
Yeah,
thinking?
so when you have a profitable, for my business this past year, I had a profitable business, so they gave me a business credit back.
Oh, you're
Yeah.
talking about the PBI, yes.
When you have
So,
a profit, yes, that's the term. Yeah.
right, PBI, I see. Yeah, everybody who is in business, and that doesn't matter if it's an LLC, an S corp, a partnership, whatever you've got going on. If your personal return is under 315,000, you get what's called QBI, and basically it's a calculation that gives you a reduction in income to help keep that business income down below that 22% mark.
Okay. And the term for that again is
Qualified business
QBI.
QBI.
Okay. Nice.
Sorry,
Awesome.
I drew a blank on that. Business, I forget what the last one is.
No
Or
worries.
acronyms, that's all we do.
We have a ton of acronyms ourselves. So.
We do. You got the Binzer yet, Ozzie?
Yeah, I know, right? Yeah. But no, yeah, I wanted to bring that up because sometimes people do write everything off,
Yeah.
and they're not able to get some of these things back where
Yeah.
could have gotten some of it back and still reported profit.
Yeah.
You know, a lot of times.
And like you said, when you're looking for that, it's not, if you're planning on buying a home, something like that, you know, and you're trying to get your even more than your first home. Our businesses can be quite profitable. We can live well in businesses, but to get the mortgage loans, to get those loans you need in your personal life, a lot of times you really need that W-2 income to simplify it.
Yeah.
And generally, if that's true, you should be doing that because that income then is deductible to the business.
Yeah.
Right. Nice. That makes a whole lot of sense. Yeah.
It really does.
Any
And
other
you know,
questions?
here we set up everything here to be very modular. We try to be sure that we can take any little piece. So if you just want payroll, we can do just payroll. If you want bookkeeping, just bookkeeping. You know, if you want tax, every kind of tax thing you can imagine. We've got financial planning. We've got all kinds of stuff going on here all the
Nice.
time. We have good relationship with a handful of attorneys. If you ever need anything for your business, for estate planning, those kinds of things, it's like a full service financial company.
Nice.
It really is.
And so a question I had, and this is, I guess, just kind of one of the non-related ones, but you know, you would probably know it. A lot of people, you know, with the economic impact of COVID-19, you know, the IRS probably was impacted. Is there anything people can expect differently this year when waiting for their refunds, or when maybe even amending anything from the years past that they have to do, and how COVID-19 has affected the IRS and turnaround times? Can you share anything with that?
Absolutely. Yeah, it is. It's a very good question because it is challenging for those of us that are the middleman between the people and the IRS. Anything you send into the IRS that is in paper form at this point, you got to expect you're looking at least 6 months, probably 9 to 12,
Wow.
before you're going to get a response on it. They are very far behind. Even they're still behind on 19. They haven't even got to the 20. You know, they're just starting, I guess, to get to the 20. And then if you have, everybody needs to keep in mind too, during this time when the IRS was shut down, people were trying to work from home. You know, it's the same thing same problem everybody's had. That everything with them is slower. So if you're trying to abate penalties, if you're trying to anything that you're trying to do for your business that involves the IRS is just going to be so much slower. And The refunds are coming. The refunds have been coming really, really well. When the stimulus checks started dropping, they slowed down a little bit, but we're still looking at two to 3 weeks for those refunds if you're owed a refund.
If you file electronically.
Yeah, filing electronically. Keep
Okay.
in mind, the state of Arizona has not adopted the federal yet. And I didn't check that this morning. I meant to check that before the podcast, but state of Arizona is still due April 15th. The feds have said they're due May 15th. A few days ago, they even said the money's due May 15th for the feds, but we're waiting for the state to catch up.
Okay.
We totally anticipate that they will. We just haven't yet.
Okay. And then you mentioned it, stimulus. I mean, anything, I know there was a recent announcement of stimulus checks. Again, this is not necessarily related to small business owners, but anything that people would, that's good to know there.
Stimulus, if you didn't get it, get on the website, get on the irs.gov website and see if you can tell where yours is. There's something right on the landing page that'll tell you
Nice.
that you can go check. If you haven't received your stimulus for 2020 or didn't get the full amount you expected to get, yeah, that gets reconciled on your tax return and you can get that refund.
Okay. Nice.
All right. Well, it's a lot of information to take up.
Yeah.
And you know, I know it wasn't very long, but I hope whoever's watching had some good information here. And Mary, we don't want to take too much of your time. I know you're a busy professional at helping people, especially during this time here with tax
2 weeks
season.
before the current deadline.
Yeah, exactly. So,
Right?
anything else that you might want to add before we let you go here?
Just keep in communication with your tax person and your accounting person. They are the ones that really know and understand what's going on. And don't lose sight of the fact that they're trying to figure this out too. It has been a challenging couple of years, but we're coming to the end of it. Everything's starting to fall into place. Things are getting better. I can feel everybody's attitude's better. The businesses are hanging in there, and I honestly believe in the next 2 to 3 months, we're going to start to really see that shift.
Good point.
Perfect. Well, anything else you want to add, Brandon?
No, that's it. I appreciate you coming on, Mary. You've given me some really good information, and like you said, Ozzie, I know there's a lot of people out there that can benefit from just the little tidbits that we got in the time we had with her.
Absolutely.
Yeah.
Lucas,
Thank you
put
for the
her information
opportunity.
on there. That way, if anybody wants to reach out to her.
Thank you so much, Ozzie and Brandon. I appreciate the time.
Yeah, thank you, Mary.
Absolutely. You have a good rest of your week.
You too. Bye-bye.
Bye. All right. So that was good.
That was good.
We're still live.
We are?
Yeah. You want to recap it a little bit?
Yeah, sure.
So I know you took some notes, but that was really good information.
No, it was good information, man. I started with them about 3 years ago, and my first year I was 1099.
Okay.
And I was paying more in taxes, making less money. So
Yeah.
I was like, there's some disconnect here. I don't know what's going on.
Did you have a professional before that was helping you, or were you doing it yourself?
Well, I did, but
Okay.
I hadn't turned it into LLC. You know, actually, my old tax person retired, and he kind of sent me to somebody else, and it just didn't really work out. So I ended up looking, and I found them, MLR, and from the first time, you know, they set me up, started doing my taxes. I'm like, wait, how come last year I paid more and made less money? Well, because we set you up now you're LLC. Obviously, you have to open up the LLC and all that.
And that's what she said, like early on is when you want to try to do that as quickly as possible. But, you know, you're growing, so you don't really realize maybe I should do this because you don't know how far it's going to go.
Yeah, exactly. You don't know how far it's going to go. And it's, you know, it is you could say it's a lot of money up front. It's like $1,000
to incorporate.
To incorporate and open up your business. But once you do that, I mean, I've saved more money than the $1,000 I spent.
Yeah.
Because I went ahead and I changed the direction in what I was doing.
How you were filing and
I was
everything.
filing. So I'm like, man, I'm just keep following the process. Now they put some more steps for me now where I'm at that I need to start implementing. So the goal is this year to implement those to hopefully create some more savings.
I love, too, what she said. Don't miss that appointment with your tax advisor at the end of the year, like October, November, because it still gives you enough time to make any adjustments before the end of the year, for that fiscal year, right?
Yeah.
So because I think some people think, oh, the year's over. I need to go meet with my tax professional and kind of see what the year looked like. It's like, she's smart. She sets up an appointment with you before the year's over.
Before the year's over.
And says, hey, let's make sure we do X, Y, and Z before the year's over, right?
Right.
So that you actually can have a better year, on your taxes come February, March, whenever you file.
A lot of people, they show up last minute and they want it done now.
Yeah.
And it doesn't take
we're
one
used
day.
to that.
Yeah, exactly. And and it doesn't take them one day to prepare your tax. I
No.
mean, it takes, especially if you have
If you want it done right,
you got, maybe you have a lot of income that year. So, well, they need to find out exactly where
and
all the
maybe you
money's
didn't
coming
keep all
from.
your receipts and you didn't do a good job of not commingling your funds.
Exactly.
Right?
So now we have to find out, okay, well, what came from where, and let's source everything. Now, we want to make sure those funds aren't commingled, because once the IRS comes knocking and says, well, you've been commingling all these funds and you owe me a lot of money.
Yeah.
Or you're going to prison for 18 months or something of the like, right? But yeah, so I feel like a lot of people wait till last minute, and it usually ends up hurting them when they try to go out and purchase.
Yeah.
And that's why I really wanted to bring her on, because we see that a lot.
Yeah. Yep.
Especially now that people have started their businesses, like you said.
In the last year. And a lot of the times we get, you'll hand over somebody and they'll say, here's my taxes for last year. What can I qualify for? And then you have to go back and maybe give that bad news of, well, your income for last year was $1,000 for the year.
Yeah.
You're like, no way, I made out. Well, after everything's deducted. And so, again, being prepared, that's why I really like Mary's point of go meet with somebody before the year's over, right? If you feel like you're going to want to use the business income for the following year, go meet with somebody before the year's over to make sure that you're doing everything you need to.
Doing everything
and then,
right.
And then even at the time that you're preparing your taxes, then you're also doing what you need to if you want to qualify.
Yeah, I completely agree, man. It's better to get ahead of the ball than to find out later.
Yep.
I have people that I know in the real estate business that they've been 1099 and they just never paid attention. Or maybe even they opened up their business, but they just never paid attention, and they just let the taxes stack up, and now they owe 70 or 100,000 to the IRS because they didn't structure it correctly.
Yeah.
In the beginning.
Yep.
So,
and we're creatures of habit, right? We start it one way and we don't want to change. So.
Oh yeah, and then we get pissed off because we owe so damn much.
Any other notes or takeaways from Mary?
No, not anything else. I just wanted to share that information for anybody that has started their business recently.
Yep. And then also, guys, so the federal has extended the deadline to May 15th, as she shared with us.
Yep, that's what she shared.
And then the state has not yet, but it looks like they're going to be following suit and giving the extension to May 15th for Arizona. So it's another little tidbit.
And another thing, the IRS is super backed up. So don't call them.
If you do anything paper, what did she say? 9 to 12 months to get a response if you have to send anything in paper?
6 to 12 is what I wrote down.
6 to 12, yeah.
It's like real snail mail, right?
They're still working on 2019, she said.
Wow.
So, yeah.
So, yeah, don't. I previously had somebody that wanted something from the IRS. They wanted a letter, and they just never got back to them.
Yeah. And what are you going to do? You're going to
I'm going to call your supervisor.
I'm going to call. Guess what? Not going to work. I've tried that. Doesn't work.
Call whoever you want. They won't answer.
Yeah, exactly. All right, guys. Well, thank you for joining us today. Ozzie, thank you for having Mary on. And with that, we're going to take it out.
Absolutely. Have a good
you.
one.
You too.
Thanks.
Thanks.